river from their homes.
Back to a conversation of a major developing story where Total Uganda has purchased the entire stake of Tullow in the joint venture for oil in the Albertine. Now, the news, which was communicated in a press statement, notes that Tullow will receive up to 2 trillion shillings for the deal. Joining us once again is Raymond Mujuni to give us details on this deal. Raymond, could you give us some details on this deal?
Thank you so much, Rita. It's a very shocking decision, of course. We just learned of it early this morning through a statement that came from Total, indicating that they had paid initially 500 million shillings, $1 million in cash to Tullow to buy out all the 4 oil fields that they own and their stake in the pipeline. That, of course, means that the entire Tullow stake in the oil Albertine Graben has been bought out. This, of course, also means that the deal in itself entirely is $575 million. But, of course, money is being withheld. The $75 million is being withheld until a deal can be reached on the capital gains tax to be paid to the Uganda Revenue Authority. Previously, we had this particular deal set up not to buy the full stake of Tullow, but to buy part of the stake of Tullow, and it was stopped because of the capital gains tax valuation that had been issued by the Uganda Revenue Authority. Now we're waiting to see what comes out of that. I've had some conversations with members at the Uganda Revenue Authority, and they've told me that it's something that just happened, and they're having meetings back end to know what comes out of the valuation. But for now, the estimation in terms of valuation for that deal that we understand could be anywhere in the region of $14.6 million. Of course, an earlier estimation was $169 million. So that means that Uganda stands to suffer a big blow in terms of the capital gains tax that they were going to collect from this deal. Also, this changes very dramatically how the dynamics work in the Ugandan oil fields. Previously, the joint venture company had 3: Tullow, Total, and Sinok. Now it will only have 2 companies, and both companies could quickly scale themselves to what you call a final investment decision that allows the oil to leave the ground much faster. This also means that the Ugandan oil could be on the market much sooner, but it also means that Sinok, which is a member of that joint venture, has to accept for this deal to go through. So all those are dynamics that are still at play. It's not something that you can put your hand to and say it's now a final confirmed deal, but it's something you can say is a deal because it's been communicated by both the buyer and the seller, and also at the stock exchange where Tullow is listed. It's already been communicated the fact that Tullow is selling all its stake in the Ugandan Albertine Graben. And of course, that means that they will have to notify their shareholders. And once they notify them, we'll be able to see on the stock exchange how that changes their numbers. Maybe, Richard, to just put some context to why Tullow is selling their stake. Tullow has taken a huge hit in terms of their revenues and, of course, in their financials in the African oil ventures. They are suffering debt in Kenya, they're suffering debt in Tanzania, and even in Uganda. So they have up to $2.8 billion worth of debt, and they're trying to raise at least $1 billion to be able to pay off that debt. And this deal could offer them a lifeline of at least half of that amount. So it's also something that we're monitoring in terms of the Tullow's company financials and how they are doing. But it's something that the Ugandan taxpayer will have to look out for if URA actually agrees to this deal and what kind of capital gains tax that URA will issue for this deal. It's something that we want to tell by the end of the business day today.
Thank you so much, Raymond. And we'll, as he has said, by the end of business today, we'll be able to tell more.